Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of business. And today we're diving deep into Amkor Technology's 2025 annual report, a document thicker than a freshman's textbook, but packed with more drama than a season finale. Amkor Technology Incorporated, that is the company we're looking at. Think of them as the unsung heroes behind the scenes of your favorite gadgets, the ones who package and test the tiny chips that make everything work. This filing, their 10K report, is like their yearly report card showing how they've been doing. Let's cut to the chase, their finances. In 2025, Amkor brought in a whopping $6.7 billion in sales. That is a nice jump of over 6% from the previous year. It is like they sold more of their crucial chip packaging services to pretty much everyone buying electronics these days. The computing sector, especially with all the buzz around artificial intelligence and data centers, saw a solid 16% increase in sales. That tells us Amkor is supplying chips that power all that AI magic happening around us. Now here is where things get a little more nuanced. While sales went up, their gross margin, which is basically the profit they make after accounting for the direct costs of making their product, dipped slightly to 14%. This means for every dollar they earned in sales, they kept about 14 cents after paying for materials and labor. Why the dip? Well, they mentioned higher overhead costs, which can include things like rent and administrative expenses, and also increased employee compensation. Plus, they're ramping up production at a new facility in Vietnam, which is often more expensive in the early stages. But don't count them out yet. Despite the slight dip in gross margin, their operating income, which is the profit from their main business operations before taxes and interest, actually went up. This happened because the increase in sales helped offset some of those higher costs, and they also had a boost from something called the Nanium insolvency receipt from an old acquisition, plus some good news related to their Arizona facility plans. So even though making each product was a bit less profitable, they sold enough to bring more money to the bottom line. Amkor is investing heavily in its future. They spent over $900 million on capital expenditures in 2025. That is a big chunk of change, meaning they're buying a lot of new equipment and building facilities. A huge part of this is their new facility in Arizona. A big move to bring semiconductor manufacturing back to the US, they're also expanding their operations in Vietnam. This shows they are betting big on growth and trying to stay ahead in a very competitive industry. In fact, they're projecting even bigger spending in 2026, close to $3 billion, mostly for that Arizona facility. That is a massive investment, but it is not all smooth sailing. Amkor is exposed to a lot of risks, as most tech companies are. They're worried about cybersecurity threats, and who isn't these days? A breach could mean losing sensitive data, disrupting operations, and facing hefty fines. They also mention risks related to geopolitical tensions, trade restrictions, and the general cyclical nature of the semiconductor industry, which can suffer from booms and busts. Plus, like many companies in Asia, some of their workforce is unionized, which always brings its set of potential challenges. On the bright side, their board of directors is actively overseeing cybersecurity risks. This means they are not just leaving it to chance and have a structured approach to managing these threats. The audit committee also gets regular updates, which is good to see that leadership is engaged. Looking at the stock market's view of Amkor, their market value was around $2.4 billion as of mid-2025. This gives you an idea of how the market values the company. Now let's talk about customers. Amkor relies heavily on a few big clients. In 2025, their top 10 customers made up a massive 72% of their total sales. That is a lot of eggs in a few baskets. Two of these, Apple Incorporated, alone accounted for nearly 30 and 11% of sales respectively. Losing even one of these giants could seriously impact Amkor's business. But what is the bigger picture here? Amkor positions itself as the world's largest US headquartered outsourced semiconductor assembly and test service provider. They're aiming for growth by leading in advanced packaging technologies, expanding their global reach, and building strong partnerships. Their strategy focuses on high growth markets like artificial intelligence, automotive, and mobile communications. They are definitely betting on the future of technology. However, they are very upfront about the risks. The semiconductor industry is notoriously cyclical. It experiences wild swings between boom times and tough downturns. Amkor acknowledges this, and it directly impacts their performance. When the industry slows down, demand for their services drops, and their factories can end up with too much unused capacity. Herding profits. Their main goal is clear, profitable sales growth. They're trying to achieve this by innovating, expanding geographically, and focusing on those key growth markets. They've also built a reputation for quality and reliability over decades, which is crucial in this industry. Amkor also carries a significant amount of debt that is over $1.4 billion. While they seem to be managing it, this debt puts constraints on their operations and makes them vulnerable to interest rate changes. They mention that restrictive covenants in their debt agreements could limit their flexibility. Looking at the actual income statement, their net income was $373 million in 2025. That is a decent profit. While sales grew, the net income stayed relatively steady compared to the previous year, mostly due to those higher costs we talked about earlier impacting their gross margin. So, what is the verdict on Amkor Technology Incorporated? They are a crucial player in the semiconductor supply chain, constantly innovating and expanding. Their heavy investment in facilities, especially the new Arizona plant, signals strong confidence in future growth, particularly in areas like AI and automotive. However, their reliance on a few huge customers and the inherent cyclicality of the semiconductor industry are significant risks. Their ability to manage costs while scaling up production and navigating global economic and political uncertainties will be key. They are definitely a company to watch as technology continues to evolve. What is your take on Amkor's big bets on advanced technology and their massive investments? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up, subscribe for more deep dives into corporate filings, and join our Discord community, linked in the description for more discussions. Thanks for watching, and I'll see you in the next Decode.